Hey everybody, welcome back to the Economic Analyst channel. In this video I'm going to finally give an update to gold and silver and where I see the price heading in for the remainder of 2022, and also discuss some of the factors that are influencing this. The first thing I want to cover is the momentum and the trend of gold using basic technical analysis. I'll do the same thing for silver in just a second. So to recap here, we saw gold really spike in the early parts of the pandemic in mid 2020, and in August 2020 gold was testing above $2,000 an ounce. It could not hold that. We saw a correction downward, and since then gold has largely stagnated outside of a blip or a bounce back in price in March of 2022 when Russia decided to invade Ukraine. So that's not really an economic force that was at play there. That was more of a geopolitical and then an interpolation of what would happen to the U.S. economy because of that, and that really caused that bounce here. But nevertheless, the outlook for gold still remains positive. So even though gold's not been able to break above its ceiling of $2,000 an ounce, what we are seeing is a rising floor price indicated by this trend of higher lows among gold. And right now the floor price is probably around $1,800 an ounce, give or take, maybe rising a little bit above that. And as time goes on, if the momentum holds its current trend, then that floor price will continue to push upward. And even if gold does not retest its ceiling, it will be pushed up by that floor price, and eventually it will lift that ceiling, and we'll start seeing gold lift from there. Silver, on the other hand, is doing a very strange thing. It's actually acting opposite to gold. So whereas silver has had a solid floor at around $21.50 an ounce, give or take, unfortunately what we're seeing is a downward trend in the ceiling price for silver, and it's the opposite effect of what we were seeing in gold. Whereas the rising floors would squeeze that ceiling price and push it upward, if the trend holds true for silver, then what we are going to see is a downward momentum push in the silver price, and the floor would be retested and probably pushed downward unless if that trend changes. So the problem with technical analysis and trend analysis is that it can only tell you what things are happening based off of past data and past forces. It does not tell you those forces that are at play, and it cannot predict when those forces will change. It just tells you what the momentum is showing. So that's something that I am going to discuss in this video, is the major component that is driving these momentum shifts and why this gold is stagnating and why silver has been pushing downward, and discuss on what would happen if those trends changed. And the major component, I think, is the dollar index. One interesting thing to note, and I've recapped this in a previous video, is that silver is both an influence of the monetary values of gold, but it also is of the industrial values of copper. So this is copper's price trend right quick, and it shows you that when copper started stagnating in 2021, that sort of capped the momentum in silver. And so until we start seeing that, and I think copper's just reconsolidating here after this huge push in 2020, but until we start seeing copper continue its momentum push upward, we're probably not going to see silver push up. But I'll come back to this in just a second. There's a reason why I'm talking about this. One thing I do want you to know is that copper increased and reached a previous peak in 2011 of $4.50 an ounce. And when we look at silver's past price history, and I'm going to pull that up right quick. When we look at silver's past price, that was when silver peaked at around $40, $50 an ounce. And so what we can see here is that it was this deflation in the copper prices that really caused that deflation of momentum in the silver price, okay? So the two are linked together, and so silver is dependent upon not just where gold is headed, but where copper is headed too. Again, like I said, with rising price inflation of commodities, I think what we're seeing mostly here is a reconsolidation of copper, and in the coming months, probably for the remainder of 2022, we should start seeing copper push north of about, say, over $4.50 an ounce, and probably push up or at above $5 an ounce, depending on how the situation evolves in both geopolitical, international politics and economics, in the global markets as well as the U.S. markets with price inflation. But I think overall the major factor that's been influencing precious metals is the dollar index. So when the dollar fell to to an index value of 90, and this is a comparison of the dollar to other currencies such as the yuan, the yen, the euro, and a few others, the pound, the British pound, that's when we really started seeing the peak in both silver and gold. So gold had this ceiling in August 2020, and we were seeing a run-up in gold in May of 2021, but it was cut short. This momentum was cut short, and we saw gold stagnate because the dollar index started rising in June, July, and August and September of 2021. Why do I think the dollar index was rising? Well, I think it was a couple of factors. One is that even though inflation was really starting to pick up at this time, the bond interest rates, government bond interest rates started dropping. That was probably because the global economic situation was deteriorating. There was the rise of the Delta variant. So the Delta variant, especially impacting global markets, probably caused a flood into U.S. treasuries as safe havens, which increased the dollar. What they really should have bought was gold and silver, but in turn, that really depressed that drive in gold and silver. Now that we're seeing the U.S. economy reopen, world economies reopen, and each successive wave of COVID get weaker and weaker, the dependency on the dollar will probably stagnate. We did see a run-up in the dollar from March to May, and I think a lot of this had to do with the Russia-Ukraine war as well as tensions brewing between China and Taiwan. So that probably will keep the dollar index elevated for some time. Nevertheless, rising inflation rates in the U.S. will cause concern among bondholders, and especially in foreign markets or in domestic markets, it might cause a little bit of dumping of bonds, and if so, we might see a drop in this U.S. dollar depending on what those domestic holders decide to purchase. If they do a flight to goods and we start seeing even more rising inflation and more selling of U.S. bonds by the Federal Reserve to combat that rising inflation, which will drive up interest rates, that could really cause a short-term squeeze on the dollar downward, push that dollar downward. So, in recent days, I have recreated, I would say, calibrated my gold and silver model to where I can more accurately chart and track how gold is performing in its real value as well as silver compared to where it should be trading based off of economic forces. So the blue line in the model on both models is the valuation of gold and silver respectively, and then the gold and the silver lines is the actual gold and silver price. You can see the strong correlations between the two, as well as being able to show based off of valuations when gold and silver was overpriced, aka overvalued due to the economic forces and the fundamentals at play. So what are those forces? Well, to recap, it's the GDP numbers, it's the stock market and how it's valued according to interest rates, whether it's over or undervalued. If the stock market is trading too high to where interest rates say it should be trading and GDP growth, then we'll see a depressed gold and silver price. If it's trading lower, then we'll see a higher gold and silver price. So, and just to put things in perspective, back in the 1970s, stocks were trading lower, shockingly, lower than where the interest rates say they should have been trading. And this was one of the reasons why we were seeing this strong performance in both gold and silver metals. So right now it's trading at a premium, and that may explain why we're seeing, partially at least, gold and silver sort of stagnate. The strengthening of the stock market ever since the bottoming out in the pandemic. And even though we're seeing a correction in stocks, it's been brought on by rising interest rates, so it hasn't really changed that valuation ratio yet. If we do see that change, which is unpredictable, that will push up the gold and silver valuations. That will push up the gold and silver price over time. But I think the more interesting one is the dollar index, okay? So we saw this rally go on inside of the dollar index. Now, what were to happen if we see the dollar index start correcting? In the last month or so, we've seen the dollar peak at about 105 on the index, and it has dropped down to 102. What were to happen if we would see the dollar continue to correct. Well, right now, gold is valued, according to the current forces and the dollar index, at about $1,950 an ounce. It's trading at about $1,850 an ounce, and for the quarter, it's trading at about $1,875. Silver is actually trading at a little bit of a discount to its valuation. According to its valuation, which is based off of copper and the gold valuation model, it's trading at about $26 an ounce in the valuation. The real price for the quarter is about $22.50, and right now we're seeing silver even hang a little bit below that right now, as it's not even being able to push above $22. So the interesting thing to note here is what were to happen if the dollar were to recorrect down to its low that we saw in the early parts of 2021, and say that it recorrects down to an index value of 90. Well, what it would do is it would push up the gold valuation for going forward, and gold's valuation would immediately jump from $1,950 an ounce to $2,250 an ounce. Silver would jump from $26 to $28.50. So this would most surely push up the gold and silver prices over time. And as we start seeing silver trend upward in the wake of slowing money growth, if the dollar does correct because of panic among investors from rising inflation and a further drop in the stock market, then silver could easily push over $30 an ounce in the next year or two, couple of years. Gold itself would push over well over $2,000 an ounce, probably over $2,200 an ounce, and even push as high upward as $2,400 an ounce. Now, that's just the valuations, okay? There have been in times past when gold and silver have outperformed their valuations. In other words, panic would really set in among investors, and they would start rushing in to hoard gold and silver. We've seen this twice in times past. First time we saw this was in the late 1970s, early 1980s, when gold would reach its first peak of $850 an ounce, a whopping 250% growth. I'm sorry, not a 250% growth. It would increase by what? 2,500%, 2,500% growth from its previous range of $35 an ounce all the way up to $850 an ounce. Silver would outperform gold even more so, rising from $1.50 an ounce to up to $1.50 an ounce to up to $50 an ounce. So silver would even push up even more north of gold. And so compared to the valuations that gold was holding at the time, where gold was valued at around, say, $400 to $500 an ounce, gold was trading at about 70%, 60, 70, almost 80% above its valuation. So what that means is that if we start seeing problems develop inside the U.S. economy, market crises emerge, and for example, rising inflation rates well exceeding expectations here, panic can set in among the markets, and this $2,200 to $2,400 an ounce valuation could be shattered by gold soaring above $4,000 an ounce. Now, do I see that happening? No, because I don't see the momentum pushing up in gold, because what we saw in the 1970s was huge, steep increases in the gold price. We saw the same thing in the 2000s between gold and silver, and that's the other part, is that gold peaked at around $1,700, $1,800 an ounce in 2011, when its valuation really suggested at about $1,000 an ounce. That was about an 80% run up in the gold price. Silver did even more so. Silver traded multiple values of its valuation, trading at over 3 times its value, from $15 an ounce on the valuation up to $50 an ounce. But if we start seeing panic set in and a rush to gold and silver, then this would argue that silver could push north of $80 an ounce, maybe even $90 an ounce, and start testing $100 an ounce. But I must say, first off, that I can't really predict that, and I'm not going to predict that. I know a lot of gold and silver bugs are trying to say, oh, well, we could see this. I don't see this because, again, we're not seeing that rising momentum continuous push in the gold and silver price. But if we start seeing price inflation spin out of control, soar above 10% and stay above it, it could start creating the recipe, so to say, the recipe of the global economic stew of a reemergence of the gold and silver bull market. Instead, though, what I think is the more likely scenario, again, is probably that gold and silver will trade and gently pushed upward from rising money. And if the dollar index starts to correct a little bit, I don't expect the dollar to drop all the way back down to a value of 90, but we are looking like we've seen at least a temporary peak in this dollar index. And if we are, and it starts correcting a little bit downward, say around below 100, then we could see gold start retesting $2,000 by the end of this year. And it would be an argument that silver should start pushing upward above $25 an ounce by the end of this year. Again, it is possible, though. We could see that run up. So just stay tuned for that. But either way, these precious metals will probably be this is probably the only real asset class that positively performs outside of holding some type of commodity exchange traded fund. Okay, that probably will yield you better returns than gold and silver, but it's not nearly as stable as gold and silver. And again, you're still holding a fund that's invested in commodity futures. You're not actually owning those physical commodities yourself. Whereas if you buy the physical precious metals, then you are actually owning those physical metals. And it's more than likely that we're not going to see a real drop in either of these two metals, not without some massive deflationary force event that's at play that's outside of a credit bubble. And I just don't see that in the current monetary and fiscal forces. The only other factor that could do that is some kind of strong development of some new technology, which is completely unpredictable, but that probably played a part in depressing the gold and silver price in 2011, 2010, when oil fracking gave us access to newer sources of oil that we could not access before, increasing the supply, drastically dropping those oil prices, keeping price inflation in check, and causing a mini boom inside the U.S. economy. Guys, as always, I thank you for watching this video. I hope that you are learning something and that you are getting something of value out of this content. If you do and you like the information that I provide you, make sure you just like this channel or like this video. Subscribe to the channel if you haven't already. If you want to see more of my videos, you can always visit my channel, see some of my past videos, some of my past predictions and projections, gauge how accurate I am to see how right I'll be going forward. And always just stay tuned. I'll be providing you new, updated, cutting edge data and looks on what's going on inside of our markets and the economic forces at play today. So once again, guys, I thank you for watching this video, and I'll talk to you next time.